In this video, I'm going to share with you a simple way to make even more money as an option trader. Many option traders either forget or don't consider the fact that they can collect dividends from the stocks they hold in their portfolio. If you're not sure what stock dividends are, I'll give a brief explanation. But if you are familiar, you can skip ahead about 2 minutes so that you can find out immediately about the option trading dividend strategy. So if we're going to take a look at what a company can do with their profits, first let me set the scene. We've got a fictitious company here called ABC Incorporated. And this company has some owners. And these owners, or shareholders, they invest in this company. And as investors, they're a partial owner of the company and they own shares of stock. Now, some people may own as little as 1 share. And some other people obviously will hold more than 1 share. The important point here is that these shareholders are all considered owners of the company. Now, as the company does business and they begin to prosper, selling their products and services, they're going to start collecting money. So they'll start collecting money, which is their revenue. And once they pay their expenses, whatever's left over is considered their profits. And so what can they do with their profits? So number one, they could save the profits for an emergency, right? They could just take the money, the extra cash that they have, put it in the bank, and let it sit there in case something comes up and they have it available to use. What else can a company do with their profits? Well, they can invest the money, they can invest the profits back into the company. Whether they open more sites or hire more employees, or maybe they buy new equipment, new hardware, new software, tools, whatever they need for the company. So this is putting money back into the company so the company can grow even further. And then the third thing that a company could do with their profits is they could take a portion of those profits and pay them to the shareholders. This is what's known as dividends. So paying some of the profits to the owners, these shareholders, is what's known as paying dividends to the shareholders. So the next thing to talk about is how the dividends get paid out, right? So it's how much to pay in dividends. Well, that largely depends on the profitability of the company. And the board will decide how profitable they are and how much of those profits they're going to distribute to the shareholders as dividends. So for example, they may decide that the shareholders are going to receive $1 per share. So the person that owns 1 share would receive $1, and the person that owns 10 shares, well, they'll get $10. So then the next question is, when do the dividends get paid? What I typically see is that dividends are paid either monthly, quarterly, or annually. And a lot will depend on the company, how they've structured their operation. And once they've set that in place, it's on a fairly rigid schedule of when they will pay dividends. A really simple method of finding out when a company pays dividends is to head on over to Yahoo Finance and then type in the stock symbol of the company that you're interested in. So I typed in HRZN, which is the symbol for Horizon Technology Finance Corporation. And what I'm looking for then is the section titled ExDividend Date. We can see that here. This date is extremely important for our purposes because the shareholders of record that hold the stock on that date will be the ones that are qualified to receive the dividend payment. So for this example, if you acquire the stock on April 18th, the day before the ex-dividend date, you hold on to the stock through the 19th, and then you immediately sell it on the 20th, even though you only hold the stock for that short period, you still qualify to receive the dividend payment. Now let's get into the strategy of how we can leverage this for our option trading. That was a brief introduction to dividend-paying stocks, what they are, and how they work. And now that we have that little bit of knowledge, let's talk about our option trading dividend strategy and how we can take advantage of dividend-paying stocks. First, let's take a look at how to get paid dividends when selling cash-secured put option contracts. So if I'm selling a cash secure put and I want to make sure that I receive the dividend payment, here's how it works. First, I'll explain what I need to do. Then I'll talk about how to qualify for the dividend. And then lastly, and most importantly, how do I get paid the dividend? Okay, the first thing is, what do I need to do when I sell my cash secure put option contract? So the first thing to do when I sell my option contract is to choose an expiration date that is before the ex-dividend date. And that's because if my option contract gets exercised and I get assigned the shares, I want to make sure I own the shares before the ex-dividend date. Which brings me to the next step. It's how to qualify. So on or before the expiration date, if the option contract is exercised, I'll get assigned the shares. So I'll purchase the shares and I'll become the new owner. Next, let's talk about how I get paid the dividend. This is the simplest step of all. I don't need to do anything. As the owner of record of those shares, I'll get paid the dividend automatically. As the owner of record of the shares, the company will send the dividend payment directly to the broker that's holding my trading account. at which point the broker will automatically deposit the dividend into my trading account. Now let's shift our focus over to how to get paid dividends when selling covered call option contracts. Next, let's take a look at getting paid dividends when selling covered call option contracts. First, I'll talk about what do I need to do when selling a covered call option contract. Then I'll talk about how do I qualify for the dividend when selling a covered call option contract. And then most importantly, I'm going to talk about how to get paid the dividend. So the first thing for me to do when selling a covered call option contract is to choose an expiration date that is after the ExDividend date. And that's because I want to make sure that I'm the owner of record on that date. So the contract needs to expire after the ExDividend date so I maintain ownership of those shares. Keep in mind there's a risk here of me losing my shares before the expiration date. So if the market price rises above my strike price, my shares could get called away before the expiration date. And so the only way to eliminate that risk is not to sell the covered call. Next, how do I qualify for receiving the dividend? Well, I just need to make sure that I own the shares on the ExDividend date. And the last item I need to address is how do I get paid the dividend? This is the simplest step of all. I don't need to do anything. As long as I'm the owner of record of those shares, I'll receive the dividend payment automatically. The company will issue the dividend to the broker that's holding my trading account, and then the broker will automatically deposit those dividend funds into my trading account. So I acquired AT&T, stock symbol T, almost a year ago, and I've been using it for the back end of a wheel strategy by selling covered calls on a regular basis. So in addition to collecting premiums every time I sell a covered call, I'm also collecting dividend payments every quarter because I'm the owner of record on the ExDividend date. Here's the first dividend I received on August 4th of 2020. It's an amount of $57.20. 3 months later, on November 2nd, I received another dividend check in the amount of $58.21. And then 3 months later, on February 1st of 2021, this year, I received another dividend check for $59.31. Sure, these are not huge returns that are going to make me an overnight millionaire, but as long as I'm holding shares in my portfolio, either through an assignment from a cash secure put, or I've got them already and I'm trying to use them for a covered call, I might as well plan my transactions keeping in mind the ex-dividend date so that I can potentially squeeze out some extra profit by collecting the dividend payments as a shareholder. If you like this video and the information that I shared with you, do me a huge favor and smash the like button. Just one more quick note and something to keep in mind when you're using this option trading dividend strategy. And it's really something simple and basic, and it comes down to this. Don't let this strategy control your option trading. So for example, if the market conditions are perfect for you to sell a cash secure put, or you need to sell the cash secure put, then by all means sell the cash secure put and don't let the ex-dividend date control whether or not you actually go through and sell the cash secure put. The same holds true for a covered call. If the conditions are right and the opportunity is there for you, then go ahead and sell the covered call. You shouldn't feel obligated or trapped to wait until after the ex-dividend date. If you're still watching this video, I just want to say thank you so much. I really appreciate it. And I also want to wish you good luck and lots of success with all of your trades.